Good morning, ladies and gentlemen. I'm Stephen, the moderator for this conference. Welcome to the conference call of Gujarat Mineral Development Corporation Limited, arranged by Concept Investor Relations to discuss its results for the first quarter ended June 30th, 2022. We have with us today Shri Roopwant Singh, IAS Managing Director, Shri L. Kulshestra, Chief General Manager and Chief Financial Officer, Shri H.K. Joshi, Senior General Manager, Technical, Shri Swagat Ray, General Manager, Project Planning and Development, Srimati A.K. Iyer, General Manager, Accounts, Shri Rajat Das, General Manager, Marketing and Sales, Shri J.N. Dave, General Manager, Power, Shri P.R. Shah, General Manager, Geology, and Shri Joel Evans, Company Secretary. At this moment, all participants are in the listen-only mode. Later, we will conduct a question and answer session. At that time, if you have a question, please press star and 1 on your touchtone telephone. Please note that this conference is being recorded. I would now like to hand the floor to Shri Roopwant Singh, Chairman and Managing Director. Thank you, and over to you, sir.
Good morning, friends. We welcome you all to this first conference of this financial year. The year has started well for GMDC. The company has been on a correction course for the past 3 quarters, and whatever results are visible now have been due to the concerted efforts of the entire team and a very supportive board. And I would not like to repeat the results. They are evident and in front of you. We welcome you all for sparing time, and we invite questions and queries from your side. Thank you so much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Amit Dixit from Edelweiss. Please go ahead.
Hi, good morning, everyone, and thanks for the opportunity. First of all, congratulations, team, for a great set of numbers again. I have 3 quick questions, if I may, sir. The first one is on realization. So while realization increased QOQ for every mine, but for Mata Nomad, for some reason, there was a slight decline. If you can explain that, that is the first question. The second question is essentially on our mining costs. So we have seen that mining cost has gone up, maybe because diesel costs might have gone up or stripping costs might have gone up. So if there are some other elements to it, and how do we look at it going ahead? And the third question is if you can throw some light on the BCG draft report that was supposed to be tabled around this time. These are the questions.
Oh, okay, Amit. Thank you. We'll start with the Mata Nomad. Mata Nomad project is currently the backbone of the organization and is the largest contributor to the kitty of lignite that is available for supply to the energy sector and for market sales. This year, in this quarter, we have supplied a large amount to ATPS and KLTPS. The reason is ATPS was not doing well in the previous quarter compared to this Q1 of last year to this one. The performance there has improved, and an essential requirement is regular and sustained supply of fuel. And second is the KLTPS plant, which belongs to the state power utility. That was under a major repair and overhaul in the last financial year. That has also come into operation this year. So the supplies to both these plants have increased. The pricing for the fuel there is regulated by a government formula, which is very conservative. And though there is action underway to update that formula so that GMDC is able to get adequate realization or reimbursement for the efforts put in. But the realization from Matanomad being low is principally on account of more supply to the power sector. As far as the mining cost is concerned, Amit, you are well aware, there has been a huge upward correction in the fuel prices. The fixed cost component for our lignite production is in the range of 9% only. The rest of it comes from the variable components, that is work and diesel. Out of this, diesel accounts for more than 50% of the cost. There has been, we are bulk consumers, so there has been a huge correction from 80 rupees, in the range of 80 rupees to in excess of 120 rupees for bulk supply. So that has had an impact on the mining cost, where you see the cost has gone up significantly. BCG report, yes, their engagement with us is divided into 3 phases. Their engagement with us is divided into 3 phases. Phase 1 was identifying opportunities, and the subsequent phases are moving towards those opportunities. So phase 1 has completed, and we have a report of actionable points. They can broadly be divided into improvement of processes and new initiatives at our level. But the larger initiatives would require more deep diving, and we would be coming to you with those larger initiatives in the subsequent interactions with the investor community. But at the moment, you would see us acting on 3-4 fronts. There would be an effort towards greater digitization and automation of operations in the mining operations that we do. There's going to be a thrust on that. Our customer outreach and the entire customer experience we seek to upgrade by regular interactions, taking feedbacks. There is also a lot of discussion on reclassifying the customer base, which is very crudely classified into small and large, and there is an anguish from the smaller players that they do not get the benefits, or they are treated at par with much larger players. So you would be seeing action on these immediately. The larger things would require deeper studies, and those studies and those actions have been initiated. We shall be coming to you with those initiatives. We had spoken about those initiatives in our earlier concalls and discussions. We shall be updating you. Thank you, Amit.
Okay, thanks, sir, and all the best.
Thank you. The next question is from the line of Rabindranath from Sunidhi Securities. Please go ahead.
Yes, Rabindra.
Rabindranath, your line is in talk mode. Kindly go ahead with your question, please. So if you have muted yourself from your answer, kindly unmute yourself and proceed with your question. As there is no response from the current participant, we move to the next question from the line of Vaibhav Barjatia from Honest and Integrity Investments. Please go ahead.
Yeah, thanks for the opportunity. I just have two questions. One is on the pricing and other is on the volume. So on the pricing front, we have seen significant slowdown in our price hikes. So just in that context, I want to know that what is still the differential that you see. I don't want exact number, but broad differential that you see between imported coal and lignite. Based on Surat delivery, if you can just broadly highlight what's the difference, and is the slowdown in price revisions driven by either the factor that there is Russian coal more coming into Gujarat, or there is some rethought from the new management that probably we should slow down due to inflation concern on the pricing front. That's the question on pricing. And second question is on the volume front. So we have seen Morbi area announcing significant 1 month shutdown. So is it likely to kind of change our volume outlook, which we have kind of targeted for 10 million tons for the year? So is there a risk to the volumes, or do you expect that after Q2, probably from Q3 onwards, there will be sharp recovery? So just wanted your views on these two things.
On the pricing, as we have discussed earlier, the pricing strategy which was changed last year made the entire marketing and sales division responsive to its main competitor, that is imported coal. We had a target number that we were able to achieve, and we were holding on to a differential. And as you would have seen in March, the appropriately comparable imported coal price for 4,200 GCV stabilized. So we broadly stabilized near that level with a significant differential. And last month there was slight uptick, and so we made some minor corrections, and now there is that price of imported coal has further eased. So we are sensitive to these needs, and as I have stated earlier, we are committed to our MSME sector. We shall be supplying them at a differential cost, but we will at the same time not miss out on an opportunity. We are fully sensitive. The management is supportive, and the board is very supportive of these efforts. And the volume, on the volume, yes, quarter one we've held out good numbers, 2.5 million tons. Although this quarter monsoons have been extremely good, which does not usually turn out to be very good for lignite mining. There has been very good rain in all geographical regions and in a very small period of time. So there was a strain on supply. The stocks got exhausted and allocations went down. Morbi also took a month off. That was more on account of the supercharged imported coal prices rather than us. As far as the volume ramp up is concerned, we are committed to that, and you would have seen RFPs for significantly expanding the capacity of Bhavnagar project, which are live right now. So that
Right. Yeah. So that answered my question. But just to follow up on the volume, so are you seeing because there is a lot of problem on the gas availability as well and the pricing of it as well.
Yes.
So are you seeing significant shift from there, and in terms of KKL cost for the gas and versus coal, are you seeing that it is becoming more viable for the customer to probably shift to coal by doing some capex?
Whether this shift industry keeps on taking every few years, looking at their opportunities. And from what I have gathered, many of the larger plants have equipment to take care of both needs, but they shift occasionally. Like for example, the Surat cluster a decade or ago, and mass shifted to gas and then shifted back to solid fuel. So this is a call which they take because it's a very their margins they seek to maintain them. So at the moment the shift is in favor of solid fuels, and now with solid fuel prices, imported fuel prices going up, they have still sustained with solid. This is what our feedback is.
Okay. Got it, sir. That's it from my side. I will come back in the question queue. Yeah.
Thank you, Vaibhav.
Thank you. The next question is from the line of Parthiv Jonsa from NVS Brokerage. Please go ahead.
Yeah, hi. Good morning, sir. Am I audible?
Yes, Parthiv.
Yeah, so first, your Q1 performance was really excellent, so congratulations on that. Sir, I have just a very couple of broad-based questions. Sir, in Q1, your revenue was almost more than doubled with excellent PAT, So just want to know, with the target of this 10 million ton this year, what is your perception of how the other remaining 3 quarters will be? So what is your overall view when you are saying that you'll foray into that rare earth elements mining and everything? And with this new couple of mines on the block, what will be the total overall opportunity for the company?
Okay. Very briefly, we are chasing 10 million ton. Second quarter is going to be slightly lean because of excessive rain.
Absolutely correct.
The last 2 quarters, we will have to do a lot of catching up.
Okay.
To achieve that, I mentioned the Bhavnagar tender. These are 2 very large RFPs which have been floated. We will take care of entire of Northern Gujarat, Central Gujarat and Southern Gujarat once these become operational. New mines, yes, you should see operationalization of these mines within the next 2 financial years.
Okay.
And you would be seeing RFPs for MDOs or turnkey contracts very, very soon.
Okay. And so my last question is, with this, the new coal, this again, firming up, how do you perceive our prices in, lignite are going to firm up, or are they already in a good space, or just the movement of the pricing of the metal?
Parthiv, I didn't understand the question.
No. So I wanted to understand how are the prices firming up now for the material for lignite, or they're the same range bound, or what is the current scenario, sir?
So, like I said in the earlier question, in March the prices for imported coal, our competitor had stabilized. So
okay.
We reached a certain differential and we maintained it. There was a slight spurt. We caught it. Now those prices are easing.
Okay.
And we are sensitive. We are sensitive.
Perfect. Best of luck, sir, for the remaining part of the year, and we really hope that you give another blockbuster performance throughout the year.
Thank you, Parthiv, for your wishes.
Thank you so much, and thank you for creating shareholders' wealth also, sir. Thank you so much.
Thank you so much.
Thank you. The next question is from the line of Ravinder Naik from Sunidhi Securities. Please go ahead.
Sir, am I audible?
Yes, Ravinder.
Yeah, thank you for the opportunity. Sir, I have a few questions regarding this other plants, like the plants of monetizing the bauxite and fluorspar and the lignite co-products. Any volume and value proposition for this, impact on top line, bottom line for this year and next year, if you can guide something. And regarding this RE reserve, you have already good reserves of RE as per our understanding. And the reserve is pertaining to lithium or cerium, or what is the timeline for possible impact on top line for the bottom line on this? That is the second question. And regarding this, we have already appointed the strategic consultants for 6 months already. So what are the key suggestions you have? Any broad suggestions they have made? If you can make some suggestions, then that would be helpful for our understanding. So thank you for this. These are my questions, sir.
Thank you, let me answer it in the reverse order this time. BCG has been onboarded. Phase 1 is over. Their recommendations for our organization can broadly be clubbed into two categories. One is improvements, and the second is diversification and strategic play. The improvements are on processes, marketing, sales, and internal governance mechanisms. That activity has already kicked into action, and we would see hopefully the results in the coming quarters, because they are an evolving thing. Some of these actions take a lot of time, but the activity has started. The second and larger one, why they were here, is for diversifying the company, taking it beyond lignite and making the company future-proof from its reliance on a single fuel. There have been very good suggestions there, and they have advised on the wide array of opportunities that this company sits on, namely the reserves of limestone, silica sand, multi-metal assets, etc. So those are things on which we have made a preliminary analysis, and in the coming months, a lot of study and further research has begun on each of these. We shall be updating you on each of these initiatives, because they are large initiatives, subsequently. This would not be the right time for us to say on each of them. As far as the RE initiative is concerned, yes, a study is underway. We had hoped it would be over and we would be able to give you answers, but it would still take some time. But what I can say is the initial prognosis seems encouraging. We have, as a key to the study that is underway, we are planning to further take up exploration in our Kadipani reserve also for these metals. You should see an RFP for that in some time. Bauxite, yes, it was languishing. We were sitting on unsold assets. Recent initiatives include open auction-based sales. Number 2, beneficiating the quality so that we are able to find willing takers. 3, improving the relation and hand-holding of our joint venture partners so that the offtake goes up to maximum capacity. And similar initiatives are underway for our smaller but again important manganese asset also. Bauxite this year hopefully should end well, and so for manganese also.
Okay. And sir, regarding this RE, again, we came on this topic. So, is there any chance that government will, central government will take part in the business or take over this business in future? Or is there any chance for the company to divest to the holding in the RE business to central government, or how we should look at it in future? And what kind of reserves, is it cerium reserves, or if you can give some name of the reserves what we are having right now in the RE, that would be helpful, sir.
I understood the second part of the question. What is the first part of the question?
First part is whether the government, whether only central government has got the Indian Rare Earth company which is there in the central government state, whether that company can participate, or in future if RE business will become big, then the central government will take that business from you, or or take part in some stake in the RE business. So if you can guide something on that.
Well, I can't guide you on something which has not happened and which may happen, Ravindra, but it is a sector which is closely controlled by Government of India and Department of Atomic Energy. Whatever initiative that we take would be in consultation and directions from them. And as far as what kind of reserves are there, we have a good concentration of light rare earths. The metals and everything we shall be sharing subsequently.
Okay. So magnetic rare earth we don't have in our in reserves. That is correct?
Ravindra, please note we have light rare earth.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, thank you very much, sir. Sir, I just wanted to understand more on your EBITDA per ton. I mean, quite fantastic EBITDA per ton, close to about 1,800 to 1,900 rupees per ton this quarter. So, can you suggest or can you indicate the sustainability? How sustainable is that?
That's one question. And any other?
No, that's from my side.
This one. Well, Deepak, I'll repeat again. We were working towards a stable differential from the imported coal. We arrived at it. At the moment, the prices seem to be easing up. So we are watchful. And what our internal analysis and market analysis says that in the proximate future, we see imported coal holding some price, and we hope to sustain that differential.
Okay. So if that differential is sustained, ideally our EBITDA per ton is also likely to sustain, right?
G. This is 91% of our revenues. Lignite.
Absolutely.
G.
Fair enough. Yep, that's it from my side. Thank you very much. All the best.
Thank you.
Thank you. The next question is from the line of Rushabh Shah from RS Capital. Please go ahead.
Yeah, thank you. I just want to understand the thought process. I understand, in the government company, and going forward, there might be certain changes to the top management level. So, what is the, thought process behind ensuring that the company outlives people, so that the current, momentum continues for a longer period?
Anything else, Rushabh?
Yeah, second thing, I believe in the last call you mentioned that the total market for you is around 25 to 28 metric tons. So is this primarily the major market of this is from imported coal only? And the third question is there a possibility or opportunity to cater to a market outside Gujarat also? And my last question is, I believe we have some investments in some certain listed companies. So, what is the plan of that? Are we going to monetize, or that is going to be there, for eternity?
So, I'll answer your first question because I don't have an answer to it, and it would not be fair for me to speak on it. The Gujarat demand for solid fuel stands at around approximately 26 million tons. We have currently limited ourselves to Gujarat because the demand is significantly large, and we are a Gujarat-based company. But in the coming 3 to 4 years, you should see our production going up to 14 to 15 million tons. Then we will definitely beyond Gujarat. As far as our investment in listed companies is concerned, at the moment we are holding, but they are part of a strategic transformation plan that we are doing in partnership with BCG. So based on our capital requirements and the timing, we shall be taking a call on them. That is a very relevant point, and we are mindful of these investments. As far as the management is concerned, I would not be the right person to comment, but it is a very fantastic board. It is very supportive and very forward-looking. That is all I can say, Rushabh.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Hemant, an investor. Please go ahead.
Hello.
Yes, Hemant.
Thank you, sir, for giving the opportunity, and congratulations on a very, very good set of numbers. Sir, we have seen extremely good results in Q1. So, apart from Q2, do we see the momentum continuing in this financial year? What kind of, annual revenue you are targeting for FY23 as well as margins?
Okay. What else, Hemant?
Just one only.
Okay. I'll probably repeat myself. What we said, Q2, because of these heavy rains and spread out all over the state of Gujarat, please expect a slight moderation because the quantity available has gone down. We shall be doing a lot of catching up in Q3 and Q4, and hopefully we are able to ramp up our capacity. We are hopeful of good numbers this year. I can't share anything specific regarding numbers, but we should expect good numbers by the end of this year.
Sir, even if you can't share a specific number, any broad range?
I am not at liberty. Please look at our pricing. Please look at our volume.
Sir, will it be better than FY22?
We are hoping for better.
So any range, sir? 10%, 15%, 20%? Any range? 10 to 20? Can I expect?
Hemant, please do the numbers, our quantity as we have shared, our goals, and our pricing we have shared. Just do a few numbers, a few calculations.
Okay, sir. Sir, one follow-up question.
Mr. MD.
What will be the EBITDA per ton we can expect for the entire fiscal year?
It will be better than last year. It will be better than last year, so provided the price differential holds.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
Sir, firstly, I wanted to thank you on behalf of all the shareholders for the excellent performance and for all your efforts for the transformation of this company. And you are saving this country a great deal of forex exchange, sir. So thank you very much for that. And sir, wanted to understand, sir, that are we thinking of putting up any lignite washery? Does it make sense? And so secondly, I wanted to understand so that we have a huge amount of cash reserves that we have lent to the state government at, I think, 5.25%, so which is below the rate of inflation. So it would be far better if we could do a share buyback and return the money to the state government, so instead of just the real value of our cash reserves falling. And so those were my two questions.
Keshav, lignite washery is merely a washery in name. It is dry beneficiation of lignite to two ends. One, remove pyrite from our Bhatnagar resources and remove ash from our Matanomad asset resources. This is a step which is vital towards our movement towards and a commitment towards meeting our ESG goals. Yes, we are yet to formulate a full strategy, but these are our first steps in that direction. Improved quality of lignite from Matanomad will significantly decrease the pollution and hugely improve the efficiency of our thermal power plant and also of the state utilities thermal power plant. Second, there is no money given to government. It is lent at an interest rate which is better than whatever was prevailing at that point of time with GSFS. It is a non-banking finance company, but it is owned by the government of Gujarat. So the money is not parked with government. It is merely an instrumentality. And as far as the cash reserves are concerned, we don't have any plans of buyback because we are in a expansive and aggressive mode. We are going to open 6 new lignite projects and develop further lines of business, which we are doing in consultation with BCG, and we shall be updating you on each of these initiatives subsequently. So there is no plan for buyback. We are on an expansion journey.
Sir, also wanted to understand that our power division is now making profits. So is this so basically will it sustain going forward?
Keshav, sorry, correction, it's not making profit. The losses are down. Last quarter, it was neck and neck. There was no loss. This year, the loss compared to last year has come down. We had hired A.T. Kearney to critically look at this asset. The issue has gone to the board, and the board has responded positively. Hopefully, if these corrections come through, we should be making some money from this division also.
Okay, sir. Thank you very much and best of luck.
Thank you, Keshav.
Thank you. The next question is from the line of Rabindranath from Sunidhi Securities. Please go ahead.
Hello.
Yes, sir.
Yes,
Please
Rabindra.
your question.
Yeah, this is Bajrang. Actually, I think my name has been wrongly recorded.
Ji.
So, yeah, congratulations for good set of number to the entire team of GMDC. Sir, my first question pertains to the improvement that we are expecting on the power side. Apart from thermal power, I believe that there are some movement which is also happening towards renewable side. So if you could update us on that, will be really helpful. And my second question pertains to the movement towards rare earth side. I think we believe that McKinsey has been roped in for taking this to the next level. And there were some articles which have been publicized where we are looking for some strategic partner also to go into that direction. So if you could update us, what is the movement on that side, and when can we see some sort of announcement or some development which could take us to the next level. I think it is a long journey for us, but we are also looking for hiring some professional person who have an understanding of these minerals, which was also publicized. So if you could update on that side, will be really appreciated. Thank you. That's all from my side, sir.
Okay. This is Vaishnav, right? Right. So as far as the thermal power asset is concerned, I think I spoke about that just now, so I'll not speak on that. As far as the non-conventional energy is concerned, we are making efforts to develop our in-house system to strengthen our governance of these assets. Capital in the range of 1,200 to 1,300 crores over a period of a decade was invested in these non-conventional assets, and we have not developed the kind of in-house capabilities that are needed to monitor these assets so that they are able to deliver well. So we are currently in that exercise. You would have seen advertisements for recruitments of experts on these fronts. Hopefully, we'll be able to squeeze out more juice from these assets, because it is more of a governance and less of a technical issue. So please expect improvements on these fronts in the coming months. As far as the rare earth journey is concerned, yes, McKinsey has been onboarded. Yes, their study is underway. Hopefully, it is in the right direction, but it will still take some time. We have not floated any advertisement for onboarding a partner, but yes, we are going to hire professionals who will be able to analyze the ores and the other aspects better, so that we develop in-house capabilities towards moving towards in this direction. You should see some advertisements for further studies and further exploration of these assets by GMDC in the coming weeks. And we shall be coming forward with more clarity as this is an emerging area and our studies get concluded. Thank you so much.
Okay, got it, sir. And just one quick question on that side. Recently we have heard the government that they will allow some private miners to enter into lithium mining in our country as well. And very recently, NMDC has announced that they will start exploring these minerals in the Karnataka and maybe outside India also. So any ballpark assessment that we are also getting some node from the government to explore this opportunity as well in our country?
Government of Gujarat this year has made the provision to set up a special lab dedicated towards RE exploration analysis and to set up a core library for the same. The government is very well aware and they are moving in that direction. I can speak for our government. The initiative of Government of India to broad base the number of players in this sector is a welcome step because this is a pioneering field. More minds, more technology will lead to better results and a better strategic position for our nation in the global space.
Okay, thank you. All the very best to the entire GMDC team for better future performance. Thank you, sir.
Thank you so much.
Thank you. The next question is from the line of Vaibhav Barjatia from Honest and Integrity Investments. Please go ahead.
Yeah, thanks for providing the follow-up. All of us understand second quarter because historically as well there has been seasonality during rainy season of our performance, so it's quite expected. But on the second half, on the pricing front, because there will be winter in Europe and they are also trying to restart their coal plants. How do you see this outlook for the pricing differential? Because there can be quite severe situation internationally in the second half. So I just wanted your views on that. And secondly, this specific grade of 4,200 kcal is what you're talking about. So if I compare that with some of the other grades, there is a difference in movement. So most of the other grades have moved up, or at least have remained same. So what is driving that difference in movement? And do you expect that grade also to catch up with other grades? That if you can throw highlights on these 2 points, that would be helpful.
Okay. Well, Vaibhav, international geopolitics is much beyond our scope to answer, and what I can say is, like I said earlier, I'll repeat. I can speak about our customers. During the past 3 quarters, the number of customers has gone up. We have a better relationship with them. I think they are better satisfied. To fine tune it, we have started customer feedback surveys, and we are getting ourselves, the company assessed on 7 to 8 parameters, and we are going to address each of these parameters. Amongst these, there will be a question that what is their fuel preference within solid fuels, beyond solid fuels. Many of these larger players, I believe, have the capacity to accommodate gas and a solid fuel both, and they infrequently shift to whichever is a better opportunity. At the moment, I don't see gas emerging there, so there should be decent demand for our product within our state, provided we keep it at the right differential. As far as the grade-wise prices are concerned, yes, I mentioned 4,200, but we track others also, and we usually look at the prices which are closer to ours in GCV and which are available in the market, because certain prices are advertised, but that grade is not available. And the differential that we talk of is not fuel price per se. It is landed cost. So we are mindful of what our customer incurs in transporting it to its place, and we are also looking at it in terms of per GCV cost as to how much does it actually cost him in terms of energy cost. So that is how we look at these numbers. At the moment, the 4,200 is available. The larger grades, they are available with a slightly longer waiting period. So that is why we have benchmarked it with this one.
Okay. Okay, got it, sir. Thank you. That's it from me.
Thank you.
Thank you. The next question is from the line of Satyan Wadhwa from Profusion Investment Advisors. Please go ahead. Satyan Wadhwa, your line is in talk mode. Kindly go ahead with your question, please.
Thank you. You've been taking price hikes, periodically, and we're very pleased to see that. Can you just shed some light on what the current realization is versus what it was in 1Q? I might have missed that. I joined the call a few minutes late.
Okay. What else?
And has the cost gone up in terms of MDO and any other sort of non-employee type costs for mining directly? Because diesel prices have been on a tear, but now moderating. So just wanted to get a handle on, what the cost structure is looking like vis-a-vis last quarter.
Fixed cost has, in fact, Satyam, gone down. It was around 10% last year. It has gone down to 9% this year. Variable cost, yes, it has increased because of this wild rise in diesel prices, which is almost slightly more than 50% of our variable cost. So, what was the first question?
The first question was that you've been taking price hikes, pretty regularly. So just trying to get a sense of what is the average realization looking like now versus first quarter, the June quarter, because price hikes have been coming through. So just trying to get a sense of if you don't take any more hikes starting today, what will the second quarter pricing be or realization be versus the first quarter?
Our weighted average price for last year was in the range of close to 3,000 rupees last year, and this year it is in excess of 4,000. So even if imported coal prices ease up and we are taking a decision of slightly downward correction, I think we are sitting on comfortable margins.
Okay. And versus first quarter pricing, realization in second quarter should be higher, right?
Yes, but the volumes would be tighter this.
That's fair. Volumes will be lower. So I'm not trying to ask you about EBITDA guidance. I'm just asking about realization only.
Per ton realization should be better.
Okay. And one last question from me. When you think of typically, Newcastle coal is, I think, 5,500 to 6,000 kcal. And your average kcal is what, about 3,000 plus or minus a bit?
You can put it around between 32 and 34.
Okay. So given that you have high moisture content and a buyer typically is only buying kcal, so he needs to buy 2 tons, roughly 2 tons or 1.8 tons instead of 1 ton of imported coal. What discount to imported coal would a buyer be happy buying lignite at? 50%, 60%? I'm just trying to get a sense.
Satyam, that is a question to which there is no definite answer. And that too, because it's a different product, and our product varies from project to project. So the product from our Rajpadi mine is almost at par with imported coal, but yes,
okay,
it's classified as lignite. But yes, and our product from Bhavnagar project has a very good calorific value, 3,800, 3,600, but it has pyrites. So it is a very amorphous set of products that we have. So I can't give a very specific answer to it. That is why we price our lignite projects from different products differentially. And as an end consumer, from what we have been able to learn from our customers is they have a requirement for both, because the imported coal is broadly powdered and not in a lumpy form, and ours is in a lumpy form. So what ideally suits their boilers is a mix of both. So this is what we have been able to learn, and that is why there is a sustained demand for our product also. But yes, it is a reality. This is lignite. This is not coal. This is not very high calorific intensity coal. So we have to keep it at a differential price. But there is no one answer. Yes, the differential in Rajpardi would be less. Yes, the differential in Bhavnagar would be more.
Okay, sorry, I'm just going to ask one last question. I know there are people waiting, but see, current coal price, imported coal is between $350 $400. So, and your coal price is $50 right now. If I just convert, say, 4,000 to at 80 rupees, so you are at you're almost at 12.5% of imported coal. So on a kcal basis, you are very, very cheap. That's why I was trying to ask that question. What is the warranted discount? 55, 60, 65%? I'm sure, 85% is probably not the best discount.
Satyam, please add one more thing to your calculation. The landed cost.
Right.
That will make the entire picture clear for you. Our product is produced in Western Kutch, which is more than 400 kilometers away from Surat. It's one of the consumption centers. It is produced in Bhavnagar, which is 250 to 300 kilometers away from Surat, but only 100 kilometers from Morbi. So what we calculate is which mine caters to which area and what is its landed cost. And what is the landed cost for imported coal also? Because they probably come at 2 to 3 ports, and we have an idea which trader or big trader sells it where. So what is their freight cost? So if you look at these figures, then the differential is slightly less. But your analysis is right, but there is one gap.
Right, okay, but I guess just if you take in imported coal freight plus port charges plus inland freight, that will still amount to maybe more than the amount of freight you have to pay, even if you have to ship 2 tons instead of 1. Is that correct or wrong?
Ulta hai. Their landed cost is slightly lesser than ours, because ours has to travel large distances, except for the one which is produced in Rajpardi and Tadkeshwar and goes to Surat. For the rest of it, there is a significant transportation cost.
Okay. Fair enough. So your transportation cost would be in the tune of 12 to 1,500 rupees if it's going by truck. Is that a fair assessment?
Mr. Das, could you comment on these prices? Transportation cost per ton.
We request all the participants to please stay connected while we reconnect the management. Ladies and gentlemen, we have the line for the management reconnected. Thank you, and over to you, sir.
Hello, thank you. Am I still connected with Satyam?
Yeah, he's connected, sir.
Yes.
Satyam?
Yes, go ahead, please.
Satyam, I'll give you an idea of fuel costs and you take a call on it. If you transport it from the South Gujarat mines to Surat, so you're looking at amount which ranges from 500 to 700 rupees. And if you transport it from Bhavnagar to Surat, you're looking, please add 1,000 rupees there. And if you're transporting it from Kutch, please add 3,000 rupees there.
Sorry, from how much?
3,000 to the original one.
Okay. That gives me a fair idea. Thank you very much.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. For any follow-up, may we request you to rejoin the queue. The next question is from the line of Ravinder Nayak from Sunidhi Securities. Please go ahead.
Thank you for the follow-up, sir. Sir, can you please guide us on what is the contribution of revenue this year beyond lignite and power this year and next year?
Revenue besides lignite.
Besides lignite and power. Power includes the renewable power.
Yes. So revenue at the moment, 91% is coming from lignite, and the rest breakups, Mr. Kulshit, would you like to say something?
Maximum revenue comes from lignite, 91%. From power, it's around 7%, and remaining 2% is from other minerals like bauxite.
So what is the guidance for this year and next year?
We are expecting revenue from lignite that would be around 90%, and then 3% from bauxite, and 93 or 6 or 7% from power, remaining from other minor minerals.
Okay. So next year, any idea, sir?
I'm talking about 22, 23.
Yeah, 24.
Next year things will improve as our new projects come. We shall be sharing those details as our tenders and strategy formalizes.
Okay. So second question, our cash position is almost 50% of our reserves, and we have hired a consultant for improving the business further. So it is going to happen better in coming periods. So in this context, one question is it unfair to for the shareholder to expect a bonus issue kind of thing from the board at this juncture, or it is? Can you please say something on this?
I won't be able to say something on it, and we have a very generous board. Let us see what they say.
Okay. Thank you.
Thank you.
Thank you. Next question is from the line of Deepak Podar from Sapphire Capital. Please go ahead.
Hello.
Yes, please.
Yeah. Thank you very much, sir, for the opportunity. So I just have one question on the tax rate. I mean, just wanted to understand why our tax rate was on the higher side last year, and how do we see that going forward?
Well, we made a correction in that, and we moved ourselves to a lower slab. Okay. And I would request our General Manager accounts to please comment on that.
Hello, Deepak.
Yeah.
It is Anupama.
Yeah.
Last year, we have moved from old regime to new regime. But due to change from old regime to new regime, we have to make some adjustment in our deferred tax, which we were carrying. So last year, effective tax rate was higher. But this year onward, it will be as per new regime and will be around 25 to 26%. It will be in the range of 25 to 26% only.
Fair enough. Understood. Yep. Thank you. That's it from my side.
Thank you. The next question is from the line of Keshav Garg from CCIPL. Please go ahead.
So just to understand that we have around half a dozen of associates and joint ventures. So is there any activity in these, or are they dormant? And sir, when can we expect revenues to start from these joint venture and associates, and also from bauxite, and basically non-power, non-lignite streams that we are looking at? When can we expect revenues to start coming?
Keshav, very direct reply. Only 2 of these joint ventures are operational. One is for bauxite and one is for manganese. You should see an improvement in the offtake that they are going to take in the current year. Bauxite, we are going to benefit the quality so that they readily are able to absorb it and use it. Manganese, we are also working on looking at multifarious aspects to improve the returns that are there. Not a lot, but still. Rest of them, some of them are non-starters and many of them are in the closure phase. So request only to focus on these 2. But if our studies and work on advice of BCG and McKinsey comes through, you should look at larger joint ventures, more robust with a better governance structure in the coming year.
Great, sir. Thank you. And sir, also, when can revenue start coming in from bauxite and manganese?
You should see an improvement this year.
Okay, sir. Great. Thank you.
Thank you. The next question is from the line of Keval Kumar, an individual investor. Please go ahead.
Good morning, sir. Thank you for giving me opportunity to speak in conference. I have a question. Are there any plans for diversification in metal sector for mining or manufacturing? And my second question is, company was having a huge stock of bauxite at the end of last financial year, and whether company has taken any steps for liquidation of bauxite stock, and whether the company is profitable in bauxite mining or not. And that's all my 2 questions only.
Kevalji, I'll start with the bauxite. We were sitting on stock of bauxite in excess of 1 million tons.
Yes, sir.
Stock is 8 to 9 years old. There has been significant degradation in this stock. We made open auction part of it. The auction was partly successful. Some of it has found takers. At the same time, this old stock is going to be beneficiated. You should see an RFP for some trials in a few days. Once it is beneficiated, brought up to the level of what customers want, you should see offtake there. We are not very aggressive on mining bauxite, but we are aggressive on offtake and beneficiation of our existing stock, which is huge and which is locked capital for us. And your first question was for on diversification in metal. Yes, work is going on, as you're aware, on manganese and bauxite also, and rare earth that we spoke of. But we will be able to speak about them conclusively and with more confidence in the coming quarters.
Thank you, sir. Thank you, sir. That's all.
Thank you, Kevin.
Thank you. As there are no further questions, I now hand the conference over to the management for their closing comments. Over to you, sir.
I thank all the gentlemen who participated with these insightful questions, and we thank them for these questions because it helps us look at ourselves more critically and helps us perform better. And the management learns from these interactions and is able to rise to new levels. I have a few names in front of me who we spoke to. I thank them. I thank Amitji, I thank Ravindraji, I thank Vaibhav, Parthiv, Deepak, Rushabh, Hemant, Keshav, Satyam, Keshav, and Keval Kumarji. Thank you so much, and I thank the moderator for organizing this conference. Regards.
Thank you, members of the management. Ladies and gentlemen, if you need any further information or clarification, please email at gaurav.g@conceptpr.com. This concludes your conference call for today. Thank you for choosing Chorus Call Conferencing Services. You may now disconnect your lines. Thank you and have a pleasant day.